Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. So be out there viewing. Pay attention to the back of the class if you've not been watching my videos. I did one just a couple of days ago. Disregard the guff, guys. Good evening, everybody. Welcome back to those of you who saw our earlier live stream. Housing Stig is waiting in the wings with us shortly. It's a warm evening up here, and it's a Bex Blue kind of evening. I am completely overwhelmed with the amount of news that's happening in the housing market, the amount of private messages I'm getting. And the main purpose of this evening's live stream is to talk about what you need to do if you are trying to move in this mayhem of a marketplace that we've got right now, and you can't decide what to do. I'm going to try to help you with that thought process. That'll be the first thing I come on to. Before I start that, a couple of bits of housekeeping, and then after that, I'm going to bring Alex in, and we're going to discuss what's happening in the markets and take your questions and answers, because I get the feeling from the spike in private messages that I'm getting that there are a lot of people who are really, really worried about their move. The whole purpose of this channel, which is called Moving Home with Charlie, okay, and welcome again to all the new people, all the new followers. It's very carefully named Moving Home with Charlie, okay? I'm here to share 25 years of experience behind the scenes of the moving industry as a supplier to that industry, with movers to help you navigate the minefield that's already difficult enough in normal times. I'm not here for investment advice. I'm not here for financial advice. I'm not here for financial decision making. And I get so many people who think the whole question about whether they should move or not is based on a financial question. And number one takeaway from this video is it isn't. It isn't based on a financial, that is the second priority. Yes, of course, it is a massive consideration. And yes, it's the deciding factor for a lot of people whether you can or can't move. But it is not, as you will know, and if any of you watching this have already bought your first or your second home, you'll understand what I mean about the intangible, non-financial value of living in a home you're happy living in to get on with your life. And even in this relentless swirling drama we've got in this market now, there are still people in situations where it makes sense to get into a home and get the stability that can provide you with. But before I get into that, a couple of bits of housekeeping for new followers. I've had a bit of a spike in followers across my platforms, and so I'm getting lots of questions from new followers who aren't aware of a few bits and bobs. So first of all, I'm not a mortgage broker. I don't do mortgage advice. I don't do financial advice. I do welcome moving questions on these live streams. I don't have time to answer private one-to-one questions. So some of you have been sending me these absolute massively long, detailed emails and messages that would take 10-15 minutes just to read them and absorb them properly, and just hoping that I've got time to reply to that. Even if I did, I can't make decisions for you, okay? But what I can do is this. I have a private buyers live Q&A club, currently costs £15 a month, and my commitment there, although I'm overdue to do a couple of those and I will be doing them soon, is that I answer every single question of a member in that group, number one. And number two, if you send me a private message through that group, I answer 100% of those, okay? So if you really, really want my response, you've got a choice of that, either that, joining the private buyers club live Q&A, where the live streams, I will answer your questions live, and sometimes guests actually come in and join live on video on screen here, and it's great fun. Or you can send me private messages where I will always prioritize answering those private messages. If you want one-to-one time with me, you can buy a 1-hour slot subject to availability, and there's a link to that below as well if you want to do that. So I hope that helps for those of you. And I'm sorry to those of you who've been sending me very, very long messages that must have taken you ages to write. I just haven't even got time to read them. I get so many, and I'm already overwhelmed just trying to do videos to help as many hundreds and thousands of people as I can. I cannot allow that much time just to sort of answer one question, even if I could answer it, which many of them I can't, because ultimately it's a personal decision based on your personal circumstances, not just your finances, not just the market, but your personal circumstances, your relationship, your family situation, your work situation, your commuting situation, your point of life, your where you want to be, all of those things that aren't money. And I can't help with any of those. And they're all factors in a decision. Okay. Now, well, I wrote an article in the Sunday Times in January this year. The title of that article, not written by me, the headline was, don't buy in 2023, wait until 2024. Not my headline, but the article went on to say that I thought that moving home in 2023 was going to be an absolute minefield nightmare because of market uncertainty. And that is what's happening. It's what's playing out. And I know a lot of you, I've got people saying to me, oh my God, I've had an offer accepted, but now I don't know if I should go ahead with it. What should I do? What's your advice, Charlie? And sellers not knowing what to do, buyers are pulling out. And this is a nightmare for everybody. And it's basically all down to the mortgage product marketplace being in a complete state of disarray, with products being pulled and replaced and rates being changed on an almost daily basis, making it nigh on impossible for mortgage brokers to do their job, making it nigh on impossible for movers to know what their budget is to buy with and what they can proceed with and whether they can afford it. And even if they can, now with the rates going up, do they want to buy, etc. So it's huge uncertainty. I mean, we're now talking the next few months are going to be the highest levels of uncertainty for movers that we've had for a very long time. It's also a horrendous time for agents, good and bad agents, any agents right now, dealing with collapsing chains and people pulling out of deals for legitimate reasons as well. And chains falling apart and deals falling through and difficulty getting deals together because of the uncertainty of finances and uncertainty. You know, in a state like this where everything is changing on a regular basis, it's very, very difficult to make a clear decision. But what I'm going to try to do in this video in the next few minutes is to offer you some questions you can ask yourself to help you determine whether or not now is still when you should be moving or whether or not you should be waiting. So movers, estate agents, and mortgage brokers alike are having a rough time of it right now. Okay, it's not good. And the headlines, I mean, it's all over the place. You know, with it's kind of frustrating from my point of view that now suddenly the mainstream media are all agreeing, some of them, not all of them, with the 35% nominal house price fall projection over a few years. That seems to be filtering through and people are beginning to accept that's possible. But of course, what's happening with that being reported in the is just causing sort of panic because it's actually already happening and it's too late. Whereas had people started to take it more seriously 6 to 9 months ago when I started talking about it, calm decision-making and planning and preparation could have happened. Very few people wanted to hear it. Very few people listened to it. I'm sorry, this is not helping you. This is just me expressing frustration. This is what I was trying to avoid. Trying to avoid this nightmare situation where it affects people's businesses, if you're in the business of helping people move house, and it affects movers trying to get on with their life. You know, if you need to move for life reasons and your move is being frustrated or derailed by these market uncertainties, I feel for you. It's a nightmare. Let's see what we can do to try and help you out. Let me take a sip of my beer. It's funny, actually, I'm kind of absorbing a lot of the tension and stress and frankly fear that's out there at the moment in the moving industry and amongst people moving home. It is super difficult right now. And I'm here to help anyone, movers and agents alike, any way I can. Okay. If I can at all, I don't know if I can, I'm not suggesting I can, but where I can, I would love to help. So please bring me your questions, your moving related questions. Okay. And I will get through them in a minute. When I've got Alex chatting, I'll have a quick look at the questions and pick some up. But let me get down to this. As it says on the screen there, how to decide whether to buy in a chaotic market. Nobody would choose to move now if you didn't have to, because you're just throwing yourself into a snake pit where it's just headless chickens running around. But that doesn't help those of you who need to move now. Okay, so those of you who want to buy a home, let's just talk about first-time buyers for a second. If you want to buy a home, you've got your position, your finances in place. Maybe you've got a mortgage offer because you've had an offer accepted property and you're now going through and you're now worried about whether to buy or not. Ultimately, you've got to ask yourself this question: which would you regret the most? Would you regret buying and then wishing that you hadn't? Or would you regret not buying and wishing that you had? Which would be the worst of those two regrets? If you're really like, on the fence and you're just not sure and it's really tough, that question should help you arrive at your answer. The list of considerations is so long. Schools, job, commuting, family, relationships. You might be wanting to move closer to someone or further away from someone. You might be wanting to upscale because you've got children coming. You want to get out of a flat and into a house. You want some outside space and you need to move. Maybe you're relocating for a job. Any of these things where you need to move, then you should still move. You should still try to move. And all you can do in this scenario is to do everything on the list of things that improves your chances the best of being able to move. And if you are a buyer, that means having your mortgage in principle ready, your conveyance lined up, and being prepared to buy a search pack, not only because it shows the seller your commitment to the transaction, but because it speeds it up. And the shorter the transaction time, the higher your chance that it will succeed and not fall through. And below in the description on YouTube, I've got the links to where you can get the search packs, right? Where you can go find them. I've talked about them before in other videos, but they are below if you want to get your own search packs. And mortgage broker if you haven't got one, so an agreement in principle and a conveyancer. I've got all three of those lined up for people who haven't found a mortgage broker or a conveyancer that they trust. You should always try and find your own one that you trust, or ask an agent if you trust your agent to advise you on one. But make sure they really actually, it's because they actually think that they're the best one, not just because, we use these guys, right? It's got to be someone that you trust. In this market especially, really, you need quality. You need quality professionals who've got so much experience and competence and professionalism that they will get this done for you. And that is exactly why I've picked the guys that I've got. So my conveyancing partners, Thomas Legal, link below if you want to talk to those guys. You have a conversation with them up front to decide if you want to use them or not. All right. Have everything lined up so that your chances are as high as possible. A, of having your offer accepted, and B, of your transaction going through. Because what nobody wants is the nightmare of getting 3 or 4 months down the line and then the transaction falls through. If you're a seller, number one is your choice of agent above all else. But for those of you who are saying, you sent me private messages, and I just glanced, I've just seen all of these figures, and in this year, this price, this price, this price, and this price offered that, and it's just too much for me to get into that level of detail. I don't think I could even do that for a close member of my family at the moment. You've got to figure that out for yourself. I would just say, don't only base it on the finances, because assuming you are buying somewhere that you can afford to buy, and assuming you want to stay there for a long time, you will not remember how much you paid, and you will remember that the small amount of saving you might. I mean, a common question I'm getting right now is, should we renegotiate? Should we renegotiate? We've had an offer accepted, but the market's changed and we think we should renegotiate. It's really simple. You cannot renegotiate without risking the deal falling through. If the deal falling through would make you kick yourself and make you wish, oh, why don't we just stay where we were? We wanted to buy the place. Do not open a renegotiation. Pay the price you've agreed to pay if securing the property is important to you. However, if you are no longer comfortable with the price that you've offered and you are no longer willing to pay that price, then you must work out what the new price that you are willing to pay is and say to them, I'm very sorry, we're very sorry, our situation has changed. We're no longer willing to pay the price we did offer. We're only willing to pay this price now. If that's not acceptable to you, we understand. We're very sorry, we have to walk away. But you got to mean it. Don't bluff and then lose the deal and kick yourself. People do that all the time and they always kick themselves. And it's such a frustrating rookie mistake to make. And no matter how many times I warn people about it, they still think, oh, we could probably get a few thousand quid off. Oh, nice to have a few extra thousand quid. Oh shit, we've lost our home. Because sellers are also experiencing fear and uncertainty and wanting to move on. And some of them are so stressed by the transaction that actually, if it starts to look like it's shaking, they're going, do you know what? We're pulling out. We're just not going to move now. And so you risk triggering that reaction if you try to renegotiate. So if you've agreed a price and it's a price you can afford and you ultimately would be willing to pay to keep the deal, it's foolish to renegotiate if securing the home is more important. But if you are no longer comfortable paying the price, then it would be foolish to pay the price, work out your new price, explain that's your new price and why, and be prepared to walk away if they don't accept it. Right. This is very general guidance, but ultimately my message is you have got to figure this out for yourself. I can't advise you. No one else can advise you. Not even a family member can advise you. You've got to figure it out for yourself. It's tough, because you want to move, but it's daunting. I get it. It is a really, really tough decision, but just keep on thinking it through, talking it through. And the way to do it is walk yourself through each of the worst case scenarios. If we buy and then the worst case scenario happens, can we deal with that worst case scenario? If the answer is yes, then you can proceed knowing that you are prepared to accept the worst case scenario if it happens. If your imagined worst case scenario is not acceptable to you, then it's unwise to proceed. Does that make sense? Now, there's no certainty in this. There's always a risk. But then also imagine the scenario where you don't buy, but you're unhappy with your current living situation and you just need to get into a home that you own so you can get on with your life one way or another. Especially if you're trying to get into someone that's going to be for a long term. It doesn't matter that prices are going to fall. Just don't, just make sure you feel that the price is fair and it reflects things now, and accept the prices are going to drop a little bit and then come back. But if you're going there for the long term, then, crack on with your life. It's only money. You can get more of it. You can earn it, beg it, borrow it, steal it, whatever. Obviously, I'm joking. But what you can't get is more time. And if you want to have time in your new home to get on with, life is clicking past, right? Get on with your life. If you can afford to get into a home and that's going to give you stability to get on with your life, I urge you to do that as a higher priority than trying to save a bit of money. Okay. But if you are borrowing a large sum to buy a home that you only want to be in for 3 to 5 years, now is not the time. It is not the time, unless you get an absolute banger of a bargain that you're not going to attract some negative equity, or that your income is going to be able to pay off any negative equity problems that you've got in the coming years. But the situation you don't want to be in is buying somewhere that you need to move out from 3 to 5 years from now, and you can't. And as Alex will come on to say in a minute, when I stop rambling and let him join in the video, there is a chance that house prices may never recover to the real values that we had last year. In fact, on that bombshell, let's bring him in. Hey, Alex.
Hello, Charlie. I thought you were never going to stop for a second there. I've done half a bottle of wine just in your preamble.
Right. Can I ask you to kick off? in between swigs of your delicious wine, would you just explain for newcomers to this process and newcomers to our channel what you mean when you say that there is a chance house prices may never recover in real terms to the value they are today?
Yeah, okay. So we need to be very specific. I'm not talking about nominal prices here. So I'm not talking about the sticker price, the things that you will see on Rightmove. I'm talking about the underlying value of your home when adjusted for inflation.
So for context, to help, could you remind us how long did it take after the last downturn for real house values to get back to where they were compared to nominal?
So the peak was at the beginning, end of 2007, beginning of 2008. It would appear in nominal terms that you'd turn the corner within 18 months and were back up only a few years later. However, in real terms, so inflation adjusted, what your house can buy you in other things, so what its real worth is, the bottom of the market after 07 was actually 13. And we didn't get back to the same real value for housing until 21. So across that period, you're talking about 13 years from peak to trough to back up to the same value.
Right. So last time around, 13 years to get back up to the same value as before the prices fell in real inflation adjusted terms. Okay.
That's why people in 2005, 6, 7 felt that they were wealthy and they took out loans against their properties to do lots of different things, whether it was buying cars, extensions, holidays. People were wealthier, and then they were confused a few years later because their house nominally had gone back to the same value. And yet everything else was much more expensive. They couldn't take the holidays that they'd taken. They couldn't afford the cars that they had previously, simply because in real terms, their house wasn't worth as much as it had been.
Yeah. And so why are you saying that this time around they may never, that's a massive statement. They may never come back up to the same value. Which for affordability would be a good thing, right?
Yes, correct. You've got to look at it in the context of the Western world in general. We are in vast amounts of debt. It's not just us. It's Australia, it's Canada, it's the whole of the rest of Europe, and the US, obviously. The king of debt. We are in vast amounts of debt, and it is likely that there's going to be a step change to the financial system. Whether that is central bank digital currencies, whether it's just the devaluation, whether it's a move away from the dollar as a reserve currency, a combination of any of those factors, there's going to be a big shift simply because our debt burden is unsustainable. It has throttled growth from a GDP perspective for over a decade now. Nearly 20 years, in fact, ever since the dot-com bust. We're going through a revolution akin to the Industrial Revolution. We are changing. Technology is changing. And one of the things that's going to change dramatically is house prices being seen, or housing being seen, as an appreciating asset that you can treat as your pension, your extra bank account, your savings account. That I don't believe will be a thing in the future. Your house will be a home that you live in. Yes, it will be worth an amount of money, and that will be a good thing. In the UK, I think that actually there will be more private renting, especially after the crash we're about to experience, and less home ownership, a bigger divide, again, between the haves and the have-nots. But if we go down the central bank digital currency route, and therefore we're changing the way finances work, it wouldn't be in the interests of the government necessarily to allow house prices to bubble again. So in real terms, what you would expect is house prices to continue to increase, but in line with wages. Now, if that's the case, you're going to be decades before you see the same real house price that you have currently.
Because they've been so high, right?
Yes. Yeah, I mean, houses have outstripped people's ability to afford them, and only have they been affordable because interest rates have been so low. But that is a historical anomaly. The fact that interest rates have been so low for 14 years, they haven't been at any time for a century and a half beforehand.
Right. This story came out on the Telegraph today, Alex, and there was a line in there that I've highlighted that you're about to see. So hang on a second. Don't read it yet. This is the headline, right? This is the today's Telegraph. Why Britain's mortgage crisis risks triggering the biggest house price crash on record.
Mm-hmm.
We scroll down past a picture of Andrew Bailey in front of a demolishing house. And there's this line here, highlighted. And now that the dust is settling on a grim picture for the housing market, economists say that this should all have been foreseeable.
Yeah, well,
you don't fucking say. Aren't you the guys who were supposed to foresee this? And last year when we were calling this, you were going, no, that's going to be it's be fine. I can't believe that. I can't believe that line.
Madness. Can I just quickly interrupt? RPX 1979. There is a massive difference between a central bank digital currency and a cryptocurrency. You need to have a look. That one will not necessarily use blockchain. In fact, I don't think it will. The energy requirements are minimal. If you have a look at the Bank of England website and do a quick research into central bank digital currencies, that should help you.
Yeah. Not cryptocurrency, even though they want to call it Britcoin.
Yeah, well, yeah. Yeah, arose by any other name. And so
I would love to have been in the room when they came out with that one. So I know. Let's call it Britcoin.
Yeah. Oh dear. It wasn't Alistair Campbell. I can guarantee that.
No. Yeah, so there's a story out on Bloomberg today. London home asking prices slide. So they're falling in London. London tends to move before the rest of the country, both downwards and then back upwards afterwards. Tends to. Although I don't think anything's necessarily going to be the same this time.
No.
And anyone's been watching the news, you can't fail to see, even the BBC with a stock image of a very concerned looking lady looking at her bank statements.
Well, yeah, I'm not surprised with the increase in taxes that she's paying. Don't worry about the mortgage so much as how much you're losing through your tax bill.
Yeah. So let's take some questions. I've got a few actually comments that I wanted to bring up on screen. Just get rid of that. Now, some of these I've been through before, but we got new viewers here this evening. Here's someone else called Alex on YouTube. As a first-time buyer, is it reasonable to ask a seller to reduce the asking price by 5-10%?
Yes.
Well, as a first-time buyer, you don't get any special treatment. So it doesn't matter whether you're a first-time buyer or not. Is it reasonable to ask a seller? It all depends on the asking price. So basically, you have to ignore the asking price. It does bear repeating. Ignore the asking price because depending on the agent that listed it, it'll either be ridiculously overvalued or it'll be sensibly priced. And if it's really sensibly priced, there'll be people offering asking price and over. So if you offer 5 to 10% below, you're going to get ignored instantly because you, as a potential buyer of a home in the area you want to live, needs to have done your research to know and recognize what's overpriced and what's sensibly priced, which you can do by seeing which properties go off, seem to sell quite quickly. And the ones that don't, they're overpriced. And so asking prices are just a discussion starter. If you view a property, if you like it, if you make an offer, the offer should be based on what it's worth to you. It shouldn't be linked to the asking price or anything to do with it. You make the offer that you think is worth your maximum comfortable price. That's what you offer. Okay. Take into account the area, the property, the desirability, your financial situation, how long you want to live there, and what you see the economy doing. And so this question here from AW, same thing. How much of a discount would you put on Do Better? You wouldn't discount it at all if it's priced sensibly. This is, and again, for sellers, you get a good agent, they will price it correctly. It will sell like that because I have bidding buyers. So don't automatically assume that because house prices are falling, it means you're going to get property at a discount. That is a misplaced assumption. Okay.
No, but Charlie, to,
Yeah.
to quote you, the one caveat is, if you find a place that you love,
Yes.
and you've got and you make a bid which is the highest that you possibly can.
Yeah.
You don't have any more. It is your top offer.
Yeah.
Even if it is below what it's being advertised for, you probably won't get it, but there's no harm in at least asking.
Oh, 100%. And that's this next person, Nikki Kerr, says, don't worry about insulting people with low offers. It's not insulting.
No.
It's such a British thing. You go to other parts of the world and people are almost offended if you don't have a haggle.
If I went to Istanbul and just like Rightmove based everything on the marked price of the carpets,
Yes.
I don't think I'd be doing very well.
And here's a very salient point from Kicking Mustang. You'll only regret buying if you over borrow.
Yeah, 100%.
Buy now and all prices crash 50%, but you have the house that you love.
Mhm.
That's the key. C'est la vie. You can still live with it. You've got a house that you love living in. It doesn't matter what you paid for it.
You've got to change the mindset. I mean, it would be wonderful if we still had final salary pensions. It would be wonderful if, houses were worth a lot of money and everyone had one. But the reality is we've got to change the way we think about housing. It's a home first.
Well, Alex, I don't know if you actually saw, I don't think you did. I did a video last week called The Party's Over.
No, I haven't seen that one. Sorry.
No, sorry. It doesn't matter. You have your own life. It's okay. I did a video called The Party's Over. And in that, I basically said, for the Instagram landlords who are sipping pina coladas in Ibiza whilst they collect rent from their tenant to pay off their mortgage, that party's over. If they buy to that mortgage, that's over. People who are relying on property as a pension in the future, not going to happen.
Yeah.
And even those who've already think that they've made a huge amount of added wealth in the value of their property, almost certainly not as much as you think. And because of inflation, even if it is as much as you think, it's not worth as much as you think. And when you're facing your care costs, it's all gone.
Yes.
It's
that's £100,000 a year if you need any medical assistance for care costs.
It's just the property party is over.
Yeah,
it's been a 40-year party with a couple of blips, hasn't it?
Yeah, correct.
But it has been a 40-year party with a couple of blips, painful blips, but they were. It's bounced back every time. And what everyone needs to understand, and so many people don't get this, it is not going to bounce back this time like it did before.
No.
I saw someone today going, "Oh, rates are going to plummet to 0.25%," and when they do, house prices are going to shoot back up again.
I really don't think that is a realistic scenario. I mean, you can't rule anything out. It's the Bank of England, and let's face it, they don't have a good track record with sanity. However, I don't see rates dropping below about 2.5%.
Well, yeah, okay, I agree with that. We'll come on to the rates in a minute. I wanted to just ask everyone: could you, if you are someone who's currently moving and having second thoughts about moving, could you say hello in the comments, ask your question or explain your situation if you've got questions about it? Or I'd love to hear from people who are in the process of moving or about to offer and nervous to offer on somewhere that you have viewed. I'd love to hear from you. Give me your questions. Jay Lomax says, as a first-time buyer, wait 2 years, potential prices slide, or purchase now and take a hit with interest rates. That comes to, assuming you can afford to buy now or wait. Again, it's where do you want to live? You want to live with your parents, or do you want to live in rented, or do you want to live in a van? Maybe you do. And if you do, like if van life or living with your parents or whatever it might be for a couple of years is, yeah, that's fine. Then, yeah, I would wait. I'd wait 2 years. But if actually living in a home that you love is the most important thing, because you've got to remember, you've got a job, you're working hard, you're tired, you come home to your own place without the fear of a landlord that might be serving notice on you to move out, or without having to wait for a landlord to fix something that he's got to fix. He's not going to, you have a control. Even when you're mortgaged up, you have control over a home that you own, that you've bought. And that certainty in your life, especially when other things are uncertain, is something immensely valuable. Immensely valuable.
Yeah.
The dream of home ownership is not so much about the financial value of it. It's about the security of not having to rely on other people to fix stuff and not worrying about whether you're going to be able to stay or not. It's knowing that as long as you're paying for it, you can stay.
It's even more than that. It's allowing you to express your creativity in your space. It's something a renter will never be able to do.
Right, exactly. One more comment here. JA on YouTube says, I don't need to move right now, but I want to move out of my parents' house. I hear you. I remember. How long do I need to wait for sellers start pricing properly? Okay. Right now, new listing prices. Yeah, new listing prices are ridiculous. But what happens is that there are sellers out there who are motivated to sell, who will take offers below. They just don't want to advertise it. Yeah. So unless you're out there viewing properties, that's why I say in the intro, get out and view, get out and view, get out and view. If you get out and view, you will find you only need one. You haven't got to worry about all the other sellers. You only need one seller of a property that you would like to live in to go, you know what, I want to get out of here. What's your offer? I'll take it. Done. That's how I bought my first flat. If you're not out viewing, you're not even in the game, you're not even in a position to make that decision. At the moment, if you're still thinking about it and you're basing it on Rightmove asking prices, you're several months away from being in a position to actually have the option, if that makes sense. Yeah. So, how are we, everybody? Eddie Ward, Ian Buchanan. Evening. Ian, where do you get that pink hand wavy emoji from? It's weird. But
there was a question earlier, Charlie, about somebody asking whether the government are fudging unemployment figures. And you know that's a subject close to my heart.
Would you like to answer that?
Yeah. Yes.
So wait, let me set this up for you. Alex, is unemployment really low? Or are the government fudging housing unemployment figures?
Well, would you be surprised to know that in the last 5 months, 5 months, because it only runs to May, an additional 200,000 people have gone on to universal credit. And that, in fact, we are now at a level of people on universal credit at 5.98 million, which actually matches our worst month when we had COVID. But what's better is, because unemployment is a wonderful thing, if you are so sick or caring for someone who is so sick, you don't count towards unemployment. Well, it's interesting that we now have 2 million people in this country in that condition.
Whereas the condition where you're not working, but you're not unemployed.
Correct.
2 million people. And what's the unemployment? What's the official unemployment figure? Like, how many people is it?
Oh, roughly? God, I don't know.
Ballpark. Like, what difference would 2 million make to it is my point.
2 million is about somewhere between 5 and 8%.
Okay, right. So massive, basically. So in other words, the unemployment figures, if you just read the headline, you'd think there's nothing wrong. You think unemployment's brilliant. That's really low.
Let's put this in perspective. 2 million is between 5 and 8%. However, there were 800,000 people before COVID who were too sick to work. So in terms of an increase, it would be somewhere between 2 to 4% roughly. They've got basically an additional 1.2 million people in this country are now too sick to work since March of 2020.
Okay, so in a dispassionate, objective, professorly kind of way, can you summarize the truth of unemployment?
I would say it's approximately 3% higher than they're claiming at the moment. And I imagine they're claiming around 4%. I don't know, because I haven't looked at the figures recently. I focus on the universal credit to see, and the frightening thing for that is the people who are working. We have over 2 million people working who are having to claim universal credit.
2 million people working and claiming universal credit.
Correct. Their salaries, they are working, their salaries are not enough to provide the essentials to live. It's like the food bank statistics, over 3 million food parcels in the last 12 months.
Yeah.
It's frightening.
The economy is not strong, is it? They had that chap, a chap who calls himself the gypsy billionaire. He's the owner of the most holiday caravan parks in the UK.
Mm-hmm.
And he was on Radio 4 being interviewed, and he said, I don't care what the figure says, as far as I'm concerned, we are in recession, have been for some time.
Oh, I agree. I mean, I mean, we've had the conversation. Technically, we are not in recession, but it is only technically. As long as imputed rents still make up 10% of our GDP, all the figures are fudged, as far as I'm concerned.
Yeah, imputed. Even that word makes it sound dodgy, doesn't it?
Mm-hmm.
Right. I'm looking for questions from movers. There's so many to go through here. Lots of comments, but not so many questions. I've got. Yeah, Mad Mountain Man. Look at that comment on the screen now. You can blame Gordon Brown for setting up people to work and claim credit at the same time.
Well, but unfortunately, Mad Mountain Man, they have to, because childcare costs, and I don't have kids, but childcare costs are £1,200 a month.
Yeah.
If the average income is 33 grand before tax, and taxes have increased, and your childcare costs are £1,200 a month,
Yeah.
how the hell does a single mother or father afford to live?
I've got a question from Jason Boom. Supply is drying up. Jason, the first thing is where is that? I'm hitting the road and viewing and chanting patience as I go. When do you imagine some decent stock will return to give me a chance of? Okay, so I can't give you off the top of my head like regional areas, and also any comments like that. You've got to give me an area, and you know what sort of, because in any market conditions, there are always properties in certain areas that are more, so certain areas that are more desirable than others, and that will always sell quickly. Okay, so yeah, if you're hoping to get an amazing house somewhere where nothing ever comes up for sale, yeah, it's kind of an outlier in terms of the whole market at this moment. Cool, some strong comments here.
As soon as you start talking about childcare, you get some interesting comments come up.
Here's what Kel McKeown says. I pulled out of a house purchase today. I already have my mortgage offer and is valid till the end of the year, but my lender Halifax said on a new property it would be a new rate. Is this right? Kel, that is a mortgage question. I'm not a mortgage broker, but it does ring true that when they make a mortgage offer, it's on a specific property that's had a price agreed. And so, yeah, it looks like you probably lose that mortgage offer if you pull out of that house purchase. Why, out of interest, why did you pull out of it? What the question I had here? Okay, so Alina, I can't pronounce your surname. Are lenders of the same mindset? Are the lender valuers more likely or have already begun to undervalue properties so it'd be more difficult for buyers to try to obtain a mortgage deal? It's the mortgage lenders have got a tricky job. The valuation they're supposed to put on a property is not what it's going to be worth in 6 months' time. It is what is it worth today. It's quite, you know, they're not mortgage valuation valuers, lenders valuers aren't expected to predict future prices. They're simply requested to go out and evaluate today's price on something. Yeah. But what I do know from mortgage brokers is that there have been, even before the chaos of the last few weeks, a lot of down valuations happening.
Charlie, can you just address Danny Kataria's regarding recruitment?
Whereabouts are we?
About 6 questions down.
Okay.
Charlie,
yeah. I'm a commercial landlord and have exposure to many different businesses. After speaking with my tenants, things are tough at the coalface and layoffs have begun. Recruitment is dead.
Now, I have a lot of recruitment contacts. I've been a freelancer in IT and construction for the last 24 years. And it's right, recruitment is dead at the moment. When you're looking at freelance, it's still working for perm a little, but freelance always dies first because they're normally involved in capital projects. And if people aren't spending capital, the projects don't happen, the freelancers are laid off. Danny, I absolutely concur, which is why it's so problematic at the moment to make predictions or projections, because there will come a point where we fall off a cliff into recession. Now, that could be in 2 months, could be in 4 months. It's hard to tell. And it's at that point that certainly the Bank of England raises will stop. And when we'll see cuts, yeah, maybe, but not for a little while, because they're scared that inflation will come back. So, the next 6 months, this is why we've always said, both Charlie and I have always said, half two of 2023 is going to be where, things get interesting. And obviously we enter half two in only a week or so's time.
Yeah, exactly. And I feel actually this has begun a bit earlier than expected.
We've got a few inflammatory headlines, but wait until we get to the back end of July and they realize that actually the number of mortgages that are being put through is tiny and the volume in terms of amounts is tiny. Suddenly you're going to see much worse headlines.
Yeah, but what I'm saying, so I talk to a lot of estate agents. Okay, they're my clients, they're my CRM clients, and I have their private WhatsApp groups, and there is some cold fear out there.
Yeah.
Because there are some people out there who are saying that it's just they've never seen not everywhere, but some of them are going. It's just in certain sectors of the market, just tumbleweed.
Yeah. Yes. Try what I'm doing, Charlie. Commercial real estate. That's having a booming time at the moment.
Yeah, but my point is that there's no visibility in the press of what's happening at the coalface of transactions.
No, there isn't. And
so this brings me on to someone's asked a question, which is a really good question, actually. Hang on a second. Where is it? Yeah, this is JW says, shouldn't this time of year be peak buying season? Imagine what it'll be like. I mean, first-time buyers have run for cover, relatively speaking. In the last week or two, they have, and I get why. If you're borrowing a large amount, if you are lucky enough to be a cash buyer, cash first time buyer, and they do exist, or you've got a 50% deposit or higher, and you want to get in a home, and you got pressure to get into a home, you can still buy now, and you should, as long as you don't overpay. And now I really hope people understand my message of people who are buying in the last 6 to 9 months. Why I was saying don't overpay. Yeah. Those of you who have bought and have moved into places, I hope you plan to stay there for a long time. I hope you didn't overpay. But those of you who have bought and have paid too much and hoping to move in a few years, you might well find yourself a negative equity, which brings me on to Jamila Salam's comment, which is, I think some people don't understand negative equity. It's worth a quick recap of what negative equity is. In simple terms, it's when the value of your home falls below the amount you owe on your mortgage. And that causes two big problems. Number one, if you want to sell because you need to move, you can't, because selling won't release enough money to pay off your mortgage. It's a big problem. And number two, if then for any reason you can't, imagine this scenario, right? You lose your job, you get another job in a different place, you need to relocate. You can't relocate because you can't sell your house.
Mm-hmm.
You therefore can't get your new job. You therefore can't keep up with your mortgage payments. You therefore have your home repossessed. And the worst sting in the tail of as if all that wasn't bad enough, you lose your home. You've got nowhere to live. You still owe the bank the difference between what they get for your house when they sell it and what you owe them on the mortgage. So if your mortgage has got $300,000 to pay and they only sell it for $250,000, they will pursue you for the other $50,000. It's horrific. You don't want to risk it. You don't want to risk it. It's awful.
Can we address Mr. McCready, who doesn't believe that we understand about the fact that there'll be job losses?
Hold on a second. Am I still there? Can you hear me?
Yep, you're here.
Okay, here we are. Yeah, here we are. Jackie Chandler says, how much will what's coming differ from 2008? What do you think, Alex?
It'll be worse than 2008. In 2008, we had the option of dropping to almost 0% interest rates. We don't have that option anymore with the amount of debt we have currently. And people go, oh, well, household debt was worse. And yeah, individually it was. but there wasn't very much public debt. Now we have both public and private debt, which, by the way, in aggregate is much more than it was in 2008. And so we don't have any of the silver bullets left. In terms of jobs, by the way, Mr. McCready, my projection for 2025 is that we will actually peak at 12.5% unemployment. Now, that could be 26, but that would be the worst unemployment figure in the UK going back even through the 80s and 90s. So I'm well aware of the job situation, and Charlie and I have discussed it. It's going to be horrendous. 2008, we got away with it because they just dropped interest rates. They tried to print lots of money, which they thought would be lent out, but in fact, the banks didn't lend it out. So actually, that's why we didn't have the inflation, because QE at that point made no difference. It took all the way through until the COVID furlough and bounce back loans that were actually handed to individuals so they could spend them in the economy for us to get the inflation that we should have had in 2008 if the banks had lent all that QE money, but they didn't.
Oh, sorry, I was just about to say something. Now it's gone. Yes, this is what it was. The other topic that's been up for discussion a lot now is this topic of forbearance and repossession. Oh, there won't be repossessions like last time. Well, yeah, it's an interesting point. Well, why won't there be repossessions? Oh, the bank's going to be much kinder this time. Really? Why?
Banks are very kind.
Changed their terms. The banks don't care.
Charlie, banks are cuddly. They are fluffy, lovely institutions. They don't care about profit. They just want to hug you.
Well, I know that, but you know, the one thing they love even more than their customers is their shareholders.
Yeah.
And this is what will happen. You won't get a human being making a human-to-human decision about it. They will try and keep you there as long as possible because it's a pain in the ass for them to have to repossess.
Yep. So they will take over your property.
If there's any forbearance, if they decide to go interest only, or they give you a payment holiday, or any of that stuff, it's only because that's a better option for them.
Yep.
Than kicking you out. It is the only reason, right?
Which is why
this is just such bullshit that they go, oh yeah, don't worry, we're nice, we're gonna let you say it's bullshit, right? And what will happen is when they realize that you cannot and won't be able to pay anymore, you'll be removed. They will begin the process to remove you and recover because that's what they are obliged to do.
Hang on. I think what they'll do instead, and it's only this time around, this is the new thing, and it's actually a question you were asked a little bit earlier on the stream. Do I still think that large institutions will become huge private landlords? To which my answer is a resounding yes. Now, whether the banks do it themselves or whether they set up subsidiary companies to do it, I think they will come in once you've been unable to pay, and they will make you an offer. And they will say, look, you would, if we screwed you with negative equity, you would owe us 50 grand and also have no house. But instead, what we'll do is, as long as you sign a rental agreement with us for X amount, we'll just take ownership of your house completely. You'll stop paying the mortgage. We'll write the mortgage off and you will pay this much rent, but you'll guarantee it for X years. And if you don't, obviously, we'll take you to court and bankrupt you and do all those terrible things. But the asset has become ours. And I just see large institutions owning huge swathes of property. And people say, well, they don't want to own individual pieces of property. That's why they do builds to rent. You know, that's their thing. It's hard to manage. Yeah. Of course it is. They'll outsource it. Like everyone outsources everything. There are plenty of companies out there that are managing agents that manage all types of properties.
It makes what you're saying makes sense for certain types of properties, right? Purpose-built apartment blocks, yes. Terraced Victorian houses, not so much.
Yeah.
I don't see that happening with that kind of thing. So I think yes, there'll be areas where that happens, but I don't think it'll be everywhere. Yeah, I mean that would represent a really, really big. You're talking about we're going through some form of revolution at the moment.
Yes, correct. But that is what's going to happen, just as CBDCs. We've got to get our heads around the fact that it is likely that in the next 10 years, things are going to change dramatically.
Yeah. Thomas Breakspear asks, what should we be looking out for in the next 3 months to gauge where the market is heading in the next 12 to 18 months? Good question. Well, let's just talk about the next 2 to 3 months. So what actually happens in the next 3 months won't be reported, and we won't know for certain what's actually happened in terms of transaction volumes, mortgage approvals, and prices. We won't know that for some time. Like the next 3 months, so Q3 of 2023, we won't know what happens until probably Q2 of 2024. I think that the next 3 months, the next 6 months, actually, it's very, very, very hard to gauge the timescales here. But as someone who has made my living with estate agents as clients for the last 20-something years, I'm desperately worried for them, the good ones, as well as the bad. There will be a clear out of the crap agents. I'm sorry for them, but actually in the long run, that's good for everybody. Okay.
Let's face it, a lot of people started up as estate agents during COVID.
It comes down to this: that there are only 2 kinds of agents who will survive the next 6 months, with a few exceptions, but generally speaking, 2 kinds. Either agents who have been through similar downturns before and genuinely have the expertise, the skill, the experience, the contacts, and the relationships to get deals together, to hold them together and get them over the line, get people moved, right? They will be earning every penny of their money. Those guys will be okay. The other group that will be okay are the people who have a large lettings portfolio that they manage with a really good management fee income from that. I know agents like that who survived 2008 because they had a decent lettings portfolio that they managed for 4 landlords. A few of the more recent startup, like a few of the more intelligent, more forward-thinking ones will go, okay, I want to learn. I'm going to find myself a mentor. I'm going to survive this. I will figure it out and I'll find a way through, right? There will be some like that. And those will be good. And those guys will be set up very well to do well when market activity does start to return. But all of the jokers, the ones that really give the industry a bad name, and there are plenty of them, large and small, by the way. There are large and small agents.
I know who you're talking about, and I won't say anything.
Shouldn't be in business.
Yeah.
And they're the ones that make everyone go, oh, all agents are the same. And they're not, right? But there are plenty of agents out there who are so shockingly shit at their job, but it's been easy enough to make deals come through just by bullshitting vulnerable and naive people into going with them and then locking them into 26-week contracts. You go, well, you can't leave me now. I'll sue you if you try and leave me. So you're stuck with me. And here's the shit offer that's 10% below what I told you to get you. Do you want to take it? There are people who do that knowingly. They sign sellers up knowing that they're going to let them down. And I genuinely hope we see a clear out of agents who behave like that.
Yeah. Well, Charlie, it's going to be the same thing for companies. These zombie companies that have been hanging on by their fingernails, it's going to be because they employ a large number of people. Sorry, zombie companies, for anyone new to the channel, is a company which gets by in terms of its revenue and profit only just servicing its debt, because debts are, interest rates have been so low. They've taken on vast debts in order to prop up a business that in any normal environment would not be successful and would have to wind up. This is going to weed out all of those zombie companies. Now, that will be terrible for the people who work there, which is why I think that unemployment will be so high in a couple of years' time. But it will be fantastic for the country in terms of having productive businesses that provide products and services that people actually want and that are good. Because let's face it, I don't know your experience, but mine in recent years has been that service and to some degree product seems to have degraded somewhat over the last 10 to 15 years.
Yeah. Hey guys, whenever anyone comments on my videos, I live chat or comment afterwards and you go, oh, in my area, everything's fine. If you don't state what your area is, it's a meaningless, pointless comment, right? What is the area? Otherwise, it's just guff, right? You got to say it. Now, actually, we didn't finish answering Thomas's question. What to look out for? So the next 3 months. Well, yeah, I mean, if you're out actually viewing, you'll get a feel for what's happening at the coalface. If you're not viewing and just watching the news and watching media and stuff, well, and where's the market? So where is the market heading in the next 12 to 18 months? That's already been determined by what's been happening with real wage shrinkage, interest rates going up, because both of those things have a long-term delayed effect on house prices. So what's happening in the next 12 to 18 months is already baked in.
Yep.
What happens in the next 3 months isn't going to change what happens in the next 12 to 18 months. It's already coming. It's already happening. But I suppose if your question is, how are we going to be able to tell how bad it's going to get? Well, again, because of the massive delay in reporting, the time lag in reporting, it's very, very hard. We don't know until after the event.
No, but Charlie, the simplest thing is this. We've got a report coming out on Wednesday, I think, which will tell us the inflation numbers. On Thursday, we've got the Bank of England will come up with their interest rate raise, not a hold or a drop, but a raise. So you're going to look at what's happening with interest rates. You're going to look at the bank stats that the Bank of England publish. And you can also find that on the BSA website. And that'll tell you how many mortgages have been approved, which tells you where the market is going.
Yeah.
And then you're going to look at the ONS and you look at wages, real wages, not nominal, real wages. And with those bits of information, if real wages are going down, and if mortgage approvals are going down, and if interest rates are going up, and inflation is not coming down at a reasonable rate, then house prices have only got one way to go, and that is down.
Yeah.
Now, you can also look at, and Charlie can point you as to where, is the amount of supply of houses on the market versus the number that are actually being sold. So, how many houses are available for sale? I think Charlie, you know where to get those.
It's about 4 to 1 roughly. So it's
And
actually
what was it in 22 in the summer?
It's like 1 to 1.
Exactly. So, you've got huge people. I mean, it's hilarious. You had lots of people criticizing you 6 to 9 months ago, saying supply and demand, Charlie, supply and demand. House prices will never go down because there's not enough supply. Well, here's the funny thing. Those supply and demand economists are about to learn exactly what supply and demand is like, because there are now 4 times as many houses available as there are buyers to buy them.
Yeah.
Now, guess what that does to the price?
That's right. Put that in your supply and demand calculator. And in fact, so there's a question here. Are the number of properties on the market going up nationally? Yes, the answer is yes. They are going up. There are more properties coming onto the market than there are selling. By about, just actually, Christopher Watkins' stats showed the other day, it's about 2 to 1.
Yeah, well,
it's about 30-something thousand a week coming onto the market. Around about 20,000 a week being agreed, but a lot of those are falling through. Anyway, it's something like 10,000 a week. The supply is increasing at the moment, nationally. Lauren Mirani asks the question: how come prices are not yet dropping significantly? Can you explain this? They are already dropping significantly. I mean, even the last official figures from the Land Registry, which they say is their March figures, is 1.2% drops in a month. That is significant. Annualized, that's 14-15%, right?
Mm-hmm.
That is very, very significant price drop. So prices are dropping significantly already. If you extrapolate the Land Registry's rate of month-on-month house price falls to make up for their time delay, we're now at about 13% down from the highs in less than a year. Is a 13% house price drop in less than a year significant? I would say it is. So, Lawrence, what do you mean house prices are not yet dropping significantly? They are. It's just that there's a massive time lag on the reporting of it. Aaron Hughes asks, and I've got a question for you after that, Alex. Do you still feel rental prices will go down? Surely with less supply from landlords selling up, rents will increase. Yes, I do feel rental prices are going to go down because there are a lot of people who are simply moving out of rented accommodation, either to move in and share with people or moving back with parents because they can't afford their rent.
Yep.
Okay, it's as simple as that. Yes, there are landlords selling up in large numbers, but a lot of those properties have been bought by other landlords who can afford them and are renting them out again, or they've been bought by first-time buyers. But given that there aren't many first-time buyers at the moment, cash buying landlords are snapping up some bargains right now. And again, the vested interest segment of the industry who like to talk the market. Oh, did you see Russell Quirk's comment today?
Oh no, what did he say?
On Rightmove's, he said, well, Rightmove's prices are unchanged. They did actually fall, the asking prices. Only a small bit, but the asking prices fell. They're unchanged. I'd call that a result.
He is. Jesus, Russell is the Guffmeister. I think because we've got Kicking Mustang on here.
He's the greatest guffer.
I'm chasing him as well, Kicking Mustang. I've asked him repeatedly whether he's going to pay out on his bet. Yeah. I think we hit him in October and just go after him for all the cash. We can send it to charity, do what you like, but okay.
We got a question here on mortgage rates. So yeah, we've got a Bank of England decision on Thursday. Now, I think the Bank of England is going to raise rates by 0.5%. Alex disagrees. He's expecting 0.25%, aren't you?
I'm expecting 0.25%. I'm not ruling out 0.5%.
No. And my reason for thinking that they're going to raise them 0.5% is actually face saving. I think they're more concerned with their.
You think they're windmilling in the wind? I
think they're looking so bad. They've had so much bad press, their credibility, everything that that in a private conversation they're talking. Geez, it can't get much worse. Why don't we just see if we can actually nail inflation faster and whack it up 0.5%? What's the worst that can happen?
It's going to depend on what we see on Wednesday. I mean, I think core will actually be down this time. Not much. I mean, a tiny amount.
Yeah.
But it will be down, and CPI will again be down.
Yeah.
Again, probably not by a huge amount. We haven't quite got there yet. It's nearly there.
Yeah.
But
to answer Ashna's question, the Bank of England rate is going to go up on Thursday.
Oh yes,
no one is. I mean, it might shock us, but so yes, the Bank of England base is going up. But what's worse for mortgage rates is that gilt yields are spiked, so the swap rates are going to be going up even higher. Mm-hmm. Which is why today they reported that the average 2-year fixes have now exceeded 6%. Average 2-year rate on fixed mortgage 2-year fixes is now exceeding 6%.
Yeah, and yet you then get people going, oh, it's rubbish, it's only 5.2. Yes, it is. If you have a 40% deposit.
Yeah, exactly.
And this is the problem, is it depends. Both you and I would like to get to the truth. We're not interested. We don't have an agenda to push, which is why it's so irritating to see one side will only quote the rate for a 10% deposit.
Yeah.
And the other side will only quote the rate for a 40% deposit. It's really simple.
Yeah.
The average has gone up.
Yeah, exactly. Just get rid of those. Here's one for you, Alex. I'm curious about this as well because I don't know. How could CBDCs have an impact on housing?
Oh, I mean, there's many ways. So they shouldn't have an impact purely because you're looking at a different way of paying for things. That's fine. However, if the Bank of England decides to implement rules around CBDCs, so they will be programmable by their nature because it's digital currency. So, for instance, they could set, in order to avoid things like we have now with inflation and then recession, they could set time limits on how long money can sit in your account, or limits to how long or how much you can save within an account. They also bear in mind that at this point, you might be getting rid of commercial banks because they will no longer be required as a payment mechanism, not in the early days of CBDCs, but certainly down the line. That means that everyone would get the same mortgage rate. It wouldn't matter, where your mortgage rate would be based only from the Bank of England if you were to get a mortgage. you wouldn't have all these different providers who you can play off against each other or go and one of them has an algorithm that gives you a better rate than another one. And that will impact housing in that it should make it less spiky and more stable. So it's difficult to know exactly how they'll be implemented, or even at this point, if they will be implemented. I believe they will. I believe we will have CBDCs, but there's no guarantee.
Look at Darren's comment on the screen. CBDCs will act like a debt jubilee.
They will be the enabler for a debt jubilee, absolutely. And bear in mind, the debt jubilee, as I've said a few times on this thing, will not be for individuals. People will not have their mortgages go away. The debt jubilee will be at a government and country level so that they can wipe out all of that public debt. The private debt will still exist. It'll just be transferred into digital currency rather than as cash.
Right. Okay. Thank you for that answer. I'm still wrapping my head around exactly how that's going to play out.
Oh, it's quite good fun.
The transition's going to be interesting. I mean, look at our level of government competence at the moment.
No, but it's easy. That's the funny thing. I mean, my background is IT. Building the central system is great. So you start with employers, and employers put the pay into the CBDC wallet of the individual. That then you keep the retail and commercial banks to begin with, and you just carry on with your normal card from your bank and you pay, and it's all great. But as you build your own payment mechanism within the Bank of England, you can then get rid of the retail banks. And then when it comes to mortgage, you get rid of the commercial banks. And the only banks that will be left will be the, private investment banks. They will be the only ones left.
So the government's just going to get rid of banks?
Yeah. And that's why they'll become landlords. I keep saying
the banks have demonstrated over and over again that they're actually in charge.
Yeah. Well, does the government like that? Is that the way our future is going? Yeah. You've watched Star Wars, haven't you? You've seen Darth Vader and the Emperor. You've seen how that worked. Did you think he would put up with HSBC being a pain in the ass?
I wonder who are the bigger gangsters.
The government, always.
Really?
Oh, yeah. I mean, bankers are novices in comparison. Look at Machiavelli.
Yeah, I don't know. I don't think I agree with you on that. I really don't.
Well, they're not novices with money, but in terms of the game playing of politics, I'm sorry, the politicians will win that because it all comes down to the public, and the public like equity. And by that, I mean, people get upset that the person down the road gets a better deal on something than they get. When the Bank of England turns around and says, no, we will treat all of you equally and fairly. We love a bit of equality. People will say, well, that's good. Well, then why would I need to go to RBS to get my loan? I'll just get my loan from the Bank of England. I mean, it's safe as houses. You can't beat the Bank of England.
Yeah. Safe as houses. Wow, we've been going a long time and we've got a big audience. Hello, everybody. And a special welcome, by the way, to all the new followers. I hope you're finding this interesting.
And I've run out of wine.
And also, Alex, I'm hoping that you and I might actually get together in person this week for one of our longer late night chats with a couple of bottles of wine.
That sounds fantastic. Yeah,
shoot the breeze, so to speak. Talk about because I think we've come a long way since the last time we did that. There's a lot more to talk about. I would like to wrap this up. If anyone has any more critical questions that relate to anything, now's your chance. One more quick question. We've answered that one. Oh, yes, someone did ask, am I doing a solicitor live? Yeah, so I'm planning to do, actually tomorrow, I'm meeting with my mortgage broking partners, my hand-picked independent whole-of-market mortgage brokers who are fantastic, and I've had nothing but good feedback about them from all of you who've used them, so thank you. We're getting together at the offices of Thomas Legal, who are now my conveyancing partner. These guys are here. If you don't have your own, if you can't find your own, you haven't got time to find your own, I've got a backup choice of mortgage broker, conveyancer, and then also the search pack provider. I cannot stress enough, if you are buying, the number one reason to do this is not just to get the seller to accept your offer, although that does help. It's to actually speed up the transaction. Because in this particular environment, a deal falling through, when you've waited 3 months and then it falls through, and you're back to square one, you're going to start viewing again. It's a nightmare. So if you want to secure the home, I cannot recommend enough. Yes, there are people who say, well, you might risk losing money because you might need one. You may not need one after the survey comes out. Fine. In my view, it would be a risk worth taking. 300 quid, risk worth taking. You massively accelerate the deal. The links to get in touch with the mortgage guys, all the conveyancing guys, or to order your search packs are all below. They're all on my website, mhwc.co.uk. If you want to ask me and have your buying questions answered, and you want to join the buymeacoffee.com /MHWC. Where is my link? I'll put it up here for you. Here we are. Yeah, it's on the channel now. At buymeacoffee.com /MHWC, you can buy me a coffee to thank me for if you've enjoyed it and think it's worth it. You can join the private live stream club where people actually come in and join, like Alex is right now, audio only or video. We have much more in depth. We go down rabbit holes and get into specific circumstances, have those chats. Or you can book a one-to-one private video call with me for an hour as well on that URL. Is there anything else I need to mention? I don't think so.
Oi, I like coffee too.
I always share my coffee with you, Alex.
Yeah, but I've got to buy me a coffee. I've never used it.
Yes, you have. What's your buy me a coffee link?
I haven't got
buymeacoffee.com / it should be /housing Stig, shouldn't it?
Well, I would prefer it if it was buy me a wine, but they don't seem to do that.
All righty, guys. Listen, thank you very much. You've been a fantastic crowd, and you're all still there. Much gratitude. Thank you for your time. I hope it's been useful. I hope it's been entertaining. I hope we're having a little bit of light in the gloom for you. There is a lot of very bad news coming out, but always look on the bright side of life. Hey.
Yeah. Let's not sing the rest of those lyrics.
Don't chew on life's gristle. Don't grumble. Give a whistle.
Whistle.
Just before you draw your terminal breath.
Exactly that.
On that terminal note.
Always look on the bright side of life. Dude.
Life's a piece of shit when you look
at it.
Brilliant. Right, guys, I'm going to spare you any more of me and Alex's singing, and I'll see you on the next one. Thanks a lot, guys. Have a great night.
Night.
Bye-bye.